It's my pleasure to be with you again from Coral Gables, Florida. Along with many of you, we've been working from home. It's our first week back in the office, and we're delighted to be able to come back to familiar surroundings. We've all had to endure a major disruption to our lives. I hope you're all keeping safe, and please do everything you can to stay healthy. I want to start back with our videos addressing an area of our relationship that sometimes gets put in the back seat as we normally focus our conversations on investments and portfolio management. I'd like to speak about advisor and investor behavior psychology. This element of the relationship with our clients is playing and will continue to play a major role as we navigate through these choppy waters. As human beings, we have our personal mental views of the world. These views influence how we live, and investing is part of how we live. These beliefs are a result of the accumulation of experiences we've had over our lifetime. Sometimes they help to protect us from making emotional decisions, and sometimes it gets in the way of making good decisions because these biases lead us to believe in a preconceived outcome. The best relationship that exists between an advisor and his or her clients is where the foundation for the relationship is trust. This trust is both technical and personal. By technical, I mean that the advisor is knowledgeable and has experience with matters regarding investment and wealth management. It's important to have and keep this knowledge up to date. This is probably an expected element of the relationship. Personal is whether the relationship is one that fits well. By this I mean that both parties have a mutual level of respect and understanding that encourages continuous and fulfilling interactions. Enjoying each other's conversation and being sympathetic to each other's position and looking forward to interacting are healthy signs that there's a good personal mix. These are important elements, especially now. These times bring out the best and sometimes the worst in people. After all, we're dealing with people's future, their life savings, and the peace of mind that comes with having wealth. During these times, it's important for the advisor to demonstrate patience, empathy, knowledge, and humility. We're living in a period where the magnitude of these changes result in unpredictable outcomes. Given that we haven't experienced something like this before, it would be naive for one to say that they know the outcome. Predicting how a recovery will be a V, L, or U shape is at best an educated guess. We're programmed to want to have answers to our concerns, and we like them in sound bites. As advisors, it's our job to make decisions that are forward-thinking. At Premia Global Advisors, we base our portfolio construction on the data we have. We break the data into predictable and non-predictable. By predictable, I mean the information has demonstrated in the past an ability to show a trend that we can use as a tool to help determine a course of action. Non-predictable means it may reflect an outcome, but it may not be worth using to make projections. As we continue to go through these volatile times, we're working to differentiate between the two. It's important because being able to make decisions on the right set of data leads to better outcomes. Short-term market movements carry with them quite a bit of emotions. As experienced investment professionals, we underweigh emotions in the decisions we make. I hope you found this video interesting, and if you liked what you heard, we would be happy to discuss with you how we may be a good fit for you and your portfolio. Please be safe and stay healthy.